Yeah, it's only one.
Rapid
Oh,
attendance.
Fascinating.
I was thinking, I was like, oh, shoot. I normally go to open this thing like.
There we go. Tess, can you hear us?
We were waiting for one.
Just let me know. Hi there, Ted.
Sure.
Can you hear us okay?
I can, thank you.
That's great. Thank you.
Motion carried. We have the adoption of the minutes from September 5th. I'm sure everyone's had a chance to get a quick peek of those. Can we get those, motion to approve those, please? Thank you, Rob. Ryan, thank you. Any questions, concerns? Those in favor? Opposed, if any, motion carried. Great. No presentations of delegations, so straight down to reports.
Okay, thank you, Chair. Good afternoon, Chair and committee members. Thank you for having us here today. I'm pleased to present on a new topic and some exciting tool for the development community on surety bonds. My name is Komal Basatia. I'm the director, the general manager of finance and procurement services with City of Abbotsford, and we have our development director, Mr. Blake Collin. You will be assisting some of the questions or feedback that we will receive today. So without further delay, I'm just going to go in and highlight some of the benefits and why we're proposing this tool going forward, and happy to take your questions and feedback after we go through a few slides. Again, the purpose for this today is to have some discussion around this pilot project that the city is going to offer starting January 1st, 2025. And in terms of taking new security form surety bonds in terms of for servicing cost for this city. A little bit of background, city, we expect, as many of you already know, we accept two forms of security for development works. One is cash deposit, cash checks, etc. That comes to City of Abbotsford's bank, and then letter of credit. That's the second form that the majority of the developers, they use that tool for their development works within the city. Just to kind of highlight, in terms of cash, developers, the process is developer, they give cash or check to the City of Abbotsford. It goes to City of Abbotsford, their bank account, and city can claim on those cash whenever needed when the developer, for whatever reason, not able to complete the work that is required. And then the letter of credit, that developer, we have set conditions, the terms that's in place. They take those to their banking institutions, and they issue a letter of credit where developers' money is tied with that institution. But the city can claim any drawdown or claim that letter of credit as needed. And the last, that's the new tool that the city will be providing a pilot project for 2 years. Is that this under the surety bonds where developer pays an insurance premium in exchange for the surety company to provide insurance that if the developer default or not able to complete their task, the city can claim all the costs related to those projects, whatever the surety amount is going to be. And the city will claim cash, and that will come back to the city to complete the work as needed. In terms of how the surety bond works, it acts similar to letter of credit and cash deposit. Majority of the terms and conditions will be similar to letter of credit security. There will be cash on demand as city needs, and similar to other two tools. And the proof of default is not required. That's something that the bank or surety company won't be able to question City of Abbotsford. And it will not be canceled by the developer. At the end of the day, city will get to decide when to cancel. And it will be continue, similar to others, partial draws, a reduction will be permitted. And notice of cancellation will be required, similar to a letter of credit as well. Cash is because that's sitting in city's bank account. We don't require notice of cancellation, but for letter of credits and surety bond will be required. So while we're looking at this new tool, we looked at some of the benefits, why cities should start looking at this new tool for the development community. We looked at some of the benefits, both for the developer and the city itself. Major benefit, as you know, is for the developer in this case. They will have more working capital if they use surety bond rather than cash or letter of credits. It will reduce their carrying cost. It may reduce, that could be in terms of interest cost or any other premium they're paying on their carrying cost. And it may provide some extra cash flow for them to make their pro forma more strong in terms of taking into financial institution for mortgage or for any other purpose for that matter. Surety bond, it can be less expensive than cash deposit or letter of credit, but that will depend on the size of the project and the scope of the project as well. At the same time, there's some benefit to the city and the community itself as well, and that will be providing this flexibility for a developer. City may end up with more housing, more project within the city of Abbotsford, and at the same time making the city more business and development friendly. That will be a big advantage for the city as well. Again, this is financially and operationally, this is a very viable tool for the developers. While staff was doing their due diligence, we also looked at what's at risk in terms of the risk analysis. That just to make sure that it's a public, the city is a public, we need to make sure public assets and their interests are protected as well. So city is not liable if the developer not able to deliver on their project. Some of the risk that we looked at is drawing down on a security. That risk is very low. It does not happen often, but time to time, cities do experience those, but it's a very rare occurrence. Likelihood of drawing on this surety bond is very low because if only small percentage of the overall development will fall into this category. So that even reduced the scope even more. And the surety company has to assess a surety company the developer will be working with. They will assess company and their financial risk as well. So that provides another layer as well. And only, as I mentioned, only larger financially secure developer will be approved. And they will be authorized on something called OSPI with the A- rating. I do want to highlight quickly for OSPI, if some of you, for your reference, OSPI is it's a Government of Canada agency that actually very independent and reports directly to Minister of Finance at federal level. And they oversee all credit unions, banking institutions, loan companies, insurance companies, and pension group as well. So, and all other trusts as well. So it's a very independent, they provide their own insurance when it comes to providing surety bonds. In terms of the process, initially, just to start this project, the city of Abbotsford the project will be limited to only on-site subdivision servicing cost, rather than overall for the project, not off-site. This will be only for the on-site. And staff expect that this will mainly large development of single-family homes will qualify under this program. Having said that, I think some of the industrial project and some multifamily project may qualify, but those will be subject to, of course, staff, their assessment, and subject to council as well. And again, we wanted to minimize the risk. And at the time, any offsite work, if the majority of these large projects will have both on-site and off-site work, any off-site that may not qualify under a surety bond, developer will still continue with the existing tools, which cash or letter of credit. So meaning it could be a hybrid approach. We want to highlight again that this provides a benefit to reducing the working capital. Even for the on-site, there will be enough savings or working capital that could help the developer in the short and long term. Some of the examples that staff looked at previously for the last year or so, some of the major projects that may qualify under this, and there's some residential lots in West Abbotsford, some industrial project, exchange business park, and a few others that you can see on your screen. And some example we're kind of staff is thinking maybe in the future that may take advantage of this new tool. McKee Peak neighborhood, there could be some of those development may apply under this. And Augustin area, Bacaro Ranch, and West Abbotsford, just to name a few, there could be a lot more that may apply under surety bonds. While looking at the benefits and some of the risk analysis stuff, also looked at some of the other consideration, and we looked at what other city has and learned from them, what they learned from this process. One of them was where it can be a little bit extra work in terms of negotiating with the surety company, with the developer, and the city involved. And given the city has to recover its city cost, so city may be looking at assessing an admin fee, but that admin fee will be very small overall in terms of comparing to the whole project. We're expecting that number could be between $3,000 to $4,000, again, subject to the scope of the work and the project size as well. And city will be creating its own template as well that the surety company and the developer will be using. So it will not be a custom made for each developers. In terms of some of the structure that we will have around this surety tool, will be the company must be regulated by OSFI, which ODR. I think pretty much every single company will be under OSFI. And the surety must have a minimum credit rating A-. And it will be only, as I mentioned earlier, on-site subdivision. And the developer must have delivered a similar project within Abbotsford or other neighboring municipality in the last 10 years. And then, of course, the template that will be used will be prepared by City of Abbotsford. Other criteria that we will have is a development variance required for each project, and that will be subject to council approval, meaning when a developer comes in with their project, they will be speaking with our development team, and they will be assessing where if the developer wants to use this tool, that will be bring forward as a variance analysis and will be recommended to council for approval. So moving forward, the goal is to implement this project January 1st, 2025, and staff will be looking at this project throughout the next 2 years for the pilot program, and may go back to council within those 2 years as well to recommend if we need to expand the program, terminate, extend the program, or make this program permanent going forward as well. So council will be involved as staff will be providing feedback and the result of this program. Last but not least, I want to share with the committee that this new tool will be very helpful for the developers, and they also help the city as well in terms of bringing more housing. And so it's overall, it will be a win-win if we make this program successful. With that, myself and my team member, colleague, we're happy to get your feedback and answer any question you may have.
Great. Any questions? Oh,
Why limit this to on-site, not also include off-site servicing?
Well, that's a very good question. Thank you, Mr. Penner, through the chair. City wanted to be one of the highlight I made that city looked at the risk analysis as well. And one of them was when it comes to off-site, that could be a major roadway or could be a major water main or sewer main. If the developer default, that could be a lot of cost to the city. So that's kind of the big, in terms of big example, but we wanted to take slow steps. And initially it will be on site, but eventually city may grow that program to offsite as well. But there's a risk involved, and we wanted to make sure we capture everything. But I wouldn't mind if Mr. Paul would like to provide a bit more.
Thank you. Ryan, do you mind if I use your project as an example?
No, because I have a question.
Okay.
And I was going to use that as an example.
Okay, perfect. So with Ryan's permission, I'll use Miss Cooper's farm as an example. That development is very large, but we have some city infrastructure associated with that development that we want to see proceed now that we've given zoning authorization. So that includes McMillan Road and McKee Road. So those pieces, regardless of how the on-site or the remainder of the subdivision go, we need those executed for the public benefit. The infrastructure there is delinquent and doesn't meet our bylaws today. So the idea is that those would be secured under traditional mechanism, and therefore we have a higher level of confidence that in a default, we could still execute those public benefits. But on-site, if there's a default, really at the end of the day, what we can do is fence it or put up barriers, and we can let that be until we find a way forward with the remainder of the development. So it was really trying to articulate like where are the public assets and the public interests.
Experience that any drawdown on this or any default. And once one of those city go through that process and see how soon they can recover the cost, the program may be made permanent by other cities as well.
So you're mentioning these other cities. Who else is using it?
Mission just started this year, 2024, what we know, and then how many projects they're working on through the chair, sorry. And then City of Surrey has done this program since 2016 or so, and they keep extending their pilot project. Coquitlam is one of the other ones, and there's many more other municipalities throughout Canada, like Calgary, I mentioned, Quebec City, some of those, they use shorty bond quite a bit.
Thank you. Any other questions, Ryan?
I did. First of all, I just want to say I'm really grateful. And feels like a piece of policy work, but the impact it has on our ability enormous. So it's great. I guess you explained the offsites. Is that just tied to roads? Because if we go back to Cooper, we have significant bonds for the trail system, the dog parks. With like, where are we defining? Because if you just do on-sites, that could only be like 40% bonding on something like that, right? Yeah. So where is it collector and arterial roads, or is it?
The way that we're thinking about it at this moment, Ryan, through the chair, is that anything that would be secured in a development agreement would be secured through traditional means. Has been 2 or 3 in my time here. They do get a little bit tricky, even though we're more familiar with the tool, we have more certainty with the tool, it's still difficult to navigate.
And then the variance required, will that run concurrently? Like we're not going to stack some timing, so it's not going to take us longer to go to this.
Correct. The idea is that most of these projects where we feel it would qualify, these greenfield developments, we would just add that approval to the council repertoire when we go forward with the zoning or any of the other approvals that are required.
And thanks so much for doing this. Really appreciate it.
And I do want to highlight for committee that UDI is the one actually that broker approached us. They wanted to, even though the city had looked at this program before, but they're the one actually approached us to start exploring. And so.
Any other questions online or in person? Ken, please.
What's the timeline to implement this pilot project?
It will be for 2 years starting January 1st, and it will be for 2 years for 25 and 2026. So December 26 will be, and then depending on what results we get, it could be expanded before or after, could be terminated, as I mentioned in the slide. But that's the initial project time, 2 years.
Thanks. Thank you. Any other questions? There's no recommendation, but Tanis, I owe you an apology. Sorry, when we were doing the introductions, you were not online. So, or I didn't see you online, so I apologize.
No worries at all. Do you want me to do it now?
We'll go back to council for their approval because now we're changing it from either cash security or letter of credit over to surety bonds.